Hey everyone, welcome back to the MasiJones Finance Podcast. Before we dive in, make sure to subscribe to our channel so you never miss an episode. Before starting episode 2, let's briefly recap what we covered in episode 1. We explored the powerful idea that the rich don't work for money. This concept challenges the traditional notion that hard work alone is the key to financial success. Instead, we learned that the wealthy focus on making their money work for them, leveraging assets and investments to generate income without constantly trading their time for money. We also discussed the critical importance of financial literacy. We emphasized how understanding financial principles like inflation, compounding, and tax strategies can significantly affect your ability to grow and protect your wealth. Without this knowledge, even high earners can find themselves struggling financially. And finally, we touched on the difference between assets and liabilities, understanding that true wealth is built by acquiring assets that put money in your pocket, rather than liabilities that drain your resources. These foundational concepts are essential as we move forward, and today's episode will build on them as we explore how to grow your wealth through business and investing strategically. In today's episode, we will learn a crucial concept: mind your own business. And no, I'm not just telling you to focus on your job or career. We're talking about taking charge of your financial future by building and owning assets. Those things that can generate income for you, even when you're not actively working. If you're a fan of Robert Kiyosaki's Rich Dad, Poor Dad, you'll know that many people think their job is their most valuable asset. But the truth is, the wealthy understand that their real business is their portfolio of income-generating assets. Now let's be real. Not all of us have the capital to dive into real estate or buy into big businesses, but there are practical steps we can take, starting right where we are. And let's consider Ghana, for example. If you're fresh out of school or still studying, consider setting up a small side hustle, maybe something like a food delivery service. The food delivery market in Ghana is growing rapidly due to increased urbanization and the busy lifestyles of many Ghanaians. With the rise of online orders in the big cities, this can be a low-cost way to start earning. You can start with a bicycle or a motorbike and grow your business there. It's about leveraging what you have now to build something bigger. Consider starting a mobile money agency for those looking to supplement your income. Mobile money transactions in Ghana hit a record 1.06 trillion Ghana cedis in 2023, according to the Bank of Ghana. This indicates a massive opportunity for small business owners to earn money from transaction fees. Starting with a small kiosk doesn't require a huge investment, and as you build a customer base, you could expand to multiple locations. The government's continued support for digital financial services means this sector has significant growth potential. Another area is agriculture. It offers incredible opportunities if you're in the diaspora and thinking about starting something back home. Due to high local demand, Ghana's agricultural sector contributes about 19.7% to the nation's GDP, with poultry farming being one of the most profitable ventures. In 2023, Ghana produced approximately 56 million chickens, yet the market still heavily relies on imports. This gap presents a massive opportunity for local production. You don't need a huge plot of land to start, and this venture taps into the growing demand for locally produced food. Small-scale manufacturing is also worth considering for those of you with some capital and entrepreneurial experience. The manufacturing sector in Ghana has been growing, with a projected growth rate of 6.8% in 2024. There's a big demand for locally made products, and businesses producing items like liquid soap or processed foods such as palm oil can start small and scale up as you find your market. Additionally, the government's SME Growth and Opportunity Program, SME-Go, has mobilized about 8.2 billion Ghana cedis to support SMEs, making accessing financial resources for such ventures easier. Let's not forget the power of online side hustles too. The internet is a goldmine if you know how to use it. Offering freelance services like graphic design, content writing, or digital marketing can bring in extra income. Ghana's digital economy is expanding, with internet penetration reaching 50% in 2023. This growing online presence provides a great opportunity to reach local and international clients. Platforms like Fiverr, Upwork, and local classifieds are excellent starting places. Another avenue is event planning or organizing small tours. These services are always in demand, especially with the rise of cultural tourism. In the first half of 2024, tourist arrivals in Ghana increased by almost 20% to 600,000, generating about $1.8 billion in receipts. If you've got an interest for organizing, this can be a profitable and enjoyable way to make money, especially with the government's focus on promoting Ghana as a top tourist destination in Africa. The key takeaway is that owning assets, whether a small business, a side hustle, or a service you provide, means those assets work for you even when you're not actively involved. This is how you start building financial freedom. Now that we've discussed the importance of minding your own business by building and owning assets, let's talk about one of the most powerful tools the wealthy use to protect and grow their wealth: corporations. So, what exactly is a corporation? At its core, a corporation is a legal entity separate from its owners. This means it can enter into contracts, own assets, and be held liable independently of those who own or run it. Think of a corporation as a legal person. It has its rights, obligations, and responsibilities. In Rich Dad, Poor Dad, Robert Kiyosaki emphasizes how the rich use corporations not just to conduct business, but as a strategic tool to maximize their wealth. But what exactly makes corporations so powerful? First, let's start with taxes. Using Ghana, for example. In Ghana, as highlighted in PwC Ghana's Tax Facts and Figures 2024, corporations offer significant tax advantages that individuals don't have access to. For example, corporations can deduct business expenses such as salaries, rent, utilities, and even travel costs before profits are taxed. This means that only the profit left after all these expenses is subject to taxation, reducing the overall tax burden. Let me break this down. If you run a business as a sole proprietor, you're taxed on all the income you earn. However, with a corporation, you can subtract all your business-related expenses from your income before the government calculates how much tax you owe. This can save you a lot of money. The corporate tax rate in Ghana is generally 25%, but various allowances and deductions can effectively lower this rate. For instance, capital allowances can be claimed on depreciable assets like machinery and buildings, reducing taxable income. Additionally, companies in certain industries, such as manufacturing and agro-processing, can benefit from reduced tax rates and other incentives. Moreover, corporations allow for income splitting, another way to reduce taxes. Income splitting is a tax strategy where income is divided among family members or different entities to take advantage of lower tax brackets. For instance, you can pay yourself a salary from your corporation and then pay dividends to yourself or family members who are shareholders, often at a lower tax rate. In Ghana, dividends are taxed at a final withholding rate of 8%, which can be advantageous compared to higher income tax rates on salaries. Beyond taxes, corporations offer another critical benefit: limited liability. Limited liability means that your assets, like your home or car, are generally protected if your business incurs debt or is sued. Only the assets owned by the corporation are at risk. This is especially important in industries with higher risks, such as construction or manufacturing, where business liabilities can be significant. Additionally, corporations have a perpetual existence, which means they can continue to exist even after the owner or founders have passed away. This makes them an excellent vehicle for passing on wealth to the next generation, ensuring that your assets and business continue to grow and support your family long after you're gone. In Ghana, the legal framework supports this continuity, allowing businesses to remain operational under new management or ownership without the need for dissolution or reformation. This is especially advantageous for family-owned businesses looking to maintain their legacy. You might think, but I'm just starting. Do I need a corporation? The answer depends on your specific situation. Forming a corporation could be smart if you're serious about growing wealth and protecting assets. Even for small businesses or side hustles, the benefits of incorporating, such as tax savings, liability protection, and continuity, can far outweigh the initial setup costs. In Ghana, the process of incorporating a business has become more streamlined. The government's push towards formalizing the economy has incentivized small and medium-sized enterprises, SMEs, to register as corporations. These incentives include tax holidays for young entrepreneurs and exemptions for businesses in specific sectors like real estate and agriculture. The key takeaway here is that corporations are not just for large businesses. They're a powerful tool that can be used by anyone looking to build and protect their wealth. By leveraging corporations' tax advantages and legal protections, you can take a significant step toward achieving financial independence. Now that we've explored how corporations can protect and grow your wealth, let's dive into one of the most powerful strategies that the wealthy use to multiply their money: investing, with a focus on the power of compounding. This concept, championed by financial thinkers like Robert Kiyosaki and Benjamin Graham, is a cornerstone of wealth building. So, what exactly is compounding? Compounding is when the returns on your investments generate their returns. It's the process of earning interest on interest or profits on profits, leading to exponential growth over time. For instance, let's say you invest 1,000 Ghana cedis in a 91-day treasury bill in Ghana with a strategy to roll over the investment every 91 days for 5 years. By the end of those 5 years, your initial 1,000 Ghana cedis could grow significantly, even to 3,272 Ghana cedis, depending on the rate. But here's the important part. Treasury bill rates can fluctuate due to economic conditions. However, even with these changes, the power of compounding ensures that your money continues to grow over time. Compounding works best when you think long-term. True wealth isn't built through quick wins or chasing the next big thing. It's built by patiently growing assets over time. Focus on investments that generate passive income, like farming or dividend-paying stocks, which grow steadily and consistently. Benjamin Graham complements this view in his book, The Intelligent Investor, by advocating for a disciplined, long-term investment approach. Graham warns against the dangers of speculation and market timing, suggesting instead that investors focus on value and long-term growth. By holding on to quality investments, you allow compounding to do its work, gradually increasing your wealth over time. Investing always involves some level of risk, which is why diversification is crucial. Kiyosaki and Graham stress the importance of spreading your investments across different asset classes to protect against downturns in any area. Kiyosaki often talks about the importance of owning diverse assets, like small business, construction company, and paper assets, stocks, bonds, etc., to create multiple income streams. Graham recommends a balanced portfolio with a mix of stocks, bonds, and other investments. This balance reduces risk and provides a cushion against market volatility. So, how do you get started? If you're new to investing, start small, but think big. Start with whatever you can afford, whether a small piece of land, a few shares of stock, or a small business. The key is to start building assets that will grow over time. Graham adds that you should always maintain a margin of safety, investing in undervalued assets or having a built-in cushion to protect against loss. This principle helps you avoid overpaying and reduces the risk of significant losses. As we wrap up today's episode, let's take a moment to reflect on the powerful strategies we've covered. We explored the incredible power of compounding and how it can exponentially grow your wealth over time, especially when combined with disciplined long-term investing and smart diversification. We drew insights from Rich Dad, Poor Dad by Robert Kiyosaki, where we learned the importance of building assets that generate passive income, helping you achieve financial independence. Kiyosaki's emphasis on owning diverse assets, whether real estate, businesses, or paper assets, reminds us that true wealth comes from multiple income streams. We also leaned on the timeless wisdom of Benjamin Graham from The Intelligent Investor. Graham's principles of value investing, maintaining a margin of safety, and focusing on long-term growth are essential for anyone serious about securing their financial future. Additionally, today's discussion was informed by local insights, including data from PwC Ghana's Tax Facts and Figures 2024 and the Ministry of Finance's 2024 Mid-Year Fiscal Policy Review. These resources provided us with a real-world understanding of the current financial landscape in Ghana, illustrating how compounding can work in practice with instruments like the 91-day Treasury bill. Moreover, let's not forget the power of corporations in protecting and growing your wealth. Corporations offer significant benefits, including perpetual existence, which allows them to continue thriving even after the founders have passed away. This makes them a powerful vehicle for passing on wealth to future generations, ensuring that your assets and businesses remain intact and continue to grow. In Ghana, the legal framework supports this continuity, making corporations especially advantageous for family-owned businesses aiming to maintain their legacy. By leveraging the tax advantages, liability protection, and continuity that corporations provide, you can take a significant step toward achieving financial independence. Remember, the journey to financial freedom is about more than just making money. It's about making your money work for you. By applying the lessons we've discussed today, you're taking important steps towards a future of financial security and independence. Thank you for joining me on the MasiJones Finance Podcast. If this video has been helpful, please like and comment below. If you haven't already, subscribe so you don't miss out on our next episode. And as always, every financial decision you make today is a step toward your desired future. Start investing, keep learning, and watch your wealth grow over time.